Clint Cowles joining us from TD Ameritrade. Clint, thanks for coming on the show so much.
Absolutely. Thanks for having me.
You took the time to send a couple charts ahead of time. We really appreciate it. Very interesting visualization, so I'm dying to know what this is saying. First, we're looking at utilities. What are you seeing here?
Yeah, so I wanted to pull this up just because so many of the sectors have just been, kind of as you were talking earlier, just stair-stepping higher and continuing on that bullish trend. But the utilities are telling us a little bit different right now. So I wanted to bring this up, and this is zoomed in, just over the last 9 months or so. But this is still taking into account the last full year's worth of data. One of the important parts that I wanted to highlight here is that study over on the right side, and that's called the volume profile, just telling you, how many shares have been traded at each price over the last year. So that is going to show you some inflection points, which those often act as support and resistance levels. So we got a double top there. It's about a $2 wide double top in the actual price. And then when it broke down from that center point, it pretty much just shot right down that entire $2, which is going to be that target measurement from that double top from that support break. But that is going to be able to move through that area so much quicker, because if you look over on the volume profile, there have been much fewer shares traded during that section, that $2 section, right after that support was broken. So when you see areas like that, it's just so much easier for the price just to drop through there fairly quickly, because there hasn't been as many shares traded there in the past. So that's certainly one part. We did get a throwback right up to the previous support, which is now acting as resistance. But the other two studies below that I wanted to highlight, we certainly got a break below zero on the MACD. That's the top one in the lower subgraph. But then also on the RSI, I know you were using RSI earlier too, and I love that study. But I look at it a little bit differently too. So when you're in a bullish trend, you'll often see that 40 level on the RSI act as support. You can see throughout the entire year before here, every time it got down to that level, it bounced right off it and continued its bullish trend. But now, for the first time, really over the last year, that has now broken down below that 40 level. So that's certainly something significant to look at too. And also kind of looking at why this might be coming in right now, I put the 10-year yield up there. So the utility sector does tend to be quite interest rate sensitive. So when we've had the lower interest rates for the last quite a while, that has been a tailwind to the utility sector. But you can see just over the last couple of months, that downtrend in rates has kind of stalled a bit and started to stair step a little bit higher here. And I think that certainly has had a bit of an effect there on the utility sector.
It's such an interesting chart, and I love that use of RSI. It's sort of that traditional Connie Brown sort of way, right? Of thinking of it in bullish and bearish ranges, and I think that's a fantastic point about how utilities break down and then it violates that 40 level. It sort of illustrates a rotation away from a defensive part of the market. The second chart you said was on small cap. So how is this relating to what we saw with utilities?
Yeah, so I wanted to pull this one up. This is something that I've been tracking here for quite a while. I like looking at the relationship between the small caps and the large caps. And certainly looking at the S&P continuing to stair step higher and make new records. The small caps here really haven't been participating in that for a long time. We've had that $15 range in IWM that we've broken out of to the top side once and the bottom side once, but then we got right back into it again. So it does look like we're starting to break out of that now. Had a great day at that yesterday. It has pulled back a little bit here towards the end of today. So we'll want to see that weekly candle, because this is a weekly chart. We'll want to see that weekly candle actually close outside of that range. That would certainly be a pretty bullish look. But as of right now, it is still looking like that's going to happen. So in those lower studies, again, we can see the MACD is now positive, and it has also reached higher than its previous highs there. So, that is certainly confirming that. And the same look on the RSI, we will want to see that break above that 65 level in order to give us a little bit more confidence that this breakout to the top side is actually going to come through. So we haven't gotten that part yet. That would certainly give us a little bit more confidence. The moving averages that I have up there are a 10-week and a 40-week moving average. And I know you have mentioned you use a 40-week because it's very similar to the 200-day. So we do have the 10-week above the 40-week moving average there. So that's a good sign. And the last point here on this one is looking at that volume profile. So when we saw that gap on the utility sector chart coming in and having that price drop fairly quickly right through that area where there hadn't been many shares traded, well, if we can sustain this breakout on the small caps, there's also not many shares traded right above this area here either. So a jump up to that next spike could be pretty easy to come by. And here on a holiday week, when there's usually kind of lighter volume anyways, and an upward bias, it wouldn't be too surprising to see that kind of drift right up to that next spike. Now, if we can actually keep that and get some volume coming back in and supporting that coming into next week, then that's even better.
It's two fantastic charts, Clint. We don't have much time left, but I just wanted to ask you very quickly on this last one with the small caps. So I totally see what you're saying. Sort of range bound, but testing that upper end, potentially entering a vacuum of volume, which you see on the right side there. What would indicate that that's a wrong call? What would indicate that this is turning more negative? Would there be a specific line in the sand, price level wise? Would it be breaking below this sort of congestion area? Would it be a breakdown of the moving averages, something with RSI? What would be sort of your first tell that small caps are starting to not work as you might expect?
Yeah, so like we said, the RSI there still has not broken above that 65 area. So the same kind of thing where we look at the 40 area for support in a bullish trend. At 65, a lot of times will act as resistance in a bearish trend. And until we break above that, and I'm certainly not going to have nearly as much confidence there.
Right.
Also, this is a weekly candle, and the week is not over yet. So although it's looking like it's breaking out right now, if we sell back off and get below that resistance point by the end of the week, that would be not as nearly as good of a signal, because instead of looking like a breakout, then we'd have either a shooting star or a tombstone doji kind of a candle pattern there, which would suggest that we would probably come back and test the mid-range there of support near the moving averages, and what's the point of control on that volume profile where more shares are traded than anything else over the last year. So finishing out this week, if we kind of sell back off and get below that resistance line, that would certainly not have that bullish breakout confidence like it's looking like right now.
Clint, fantastic to have you on the show. Thanks so much for joining us. Have a really good holiday. And I've always thought we are underweight Midwesterners on this show. So thanks for joining me, my friend. Love to have you again on later. All right.
All right. Thanks for having me.